Well, that was ugly. Q1 of 2022 in the markets is in the books, and people are, well, not happy. Not happy because most indexes are down. The first quarter of 2022 turned out to be a losing quarter for the averages, and many people putting their money into the markets, from traders to investors, hoping they'll make an average return of 7 to 8%, well, they're disappointed today.
Uncle Roger has bad feeling about this.
So with my investing experiment, which began back in April of 2020 to open a Roth IRA, max it out, work my way into about a dozen positions, and then let them work for me. How do you think I did over that same quarter, the same quarter where everyone was losing money trading or investing, and the indexes were down? How do you think I did?
You're okay? Everybody okay? Nobody jumping out a window?
I can't look at my portfolio anymore. I just stopped checking it.
From my smile, you can probably tell that I did all right. Not the great average that everyone expects, but I made money. Didn't make a lot of money. I didn't lose any money. I made a little money. And in a market where everyone else is losing, even making a little tells you that you're on the right track. So let's take a look at my investing experiment and see what happened in this first quarter of 22. Hi, I'm James Callahan, and this is the Do-Over Show, where we at least get things right the second time around, like investing in retirement accounts started a little bit later in life.
Hiya.
Now, I'm not an investing expert or a professional. This is not investment advice to buy, sell, or hold anything. This is for educational and entertainment purposes only, and yes, I made money. That's a disclaimer because there are no shortages of videos on YouTube today out there selling us courses, investment tips, access to marketing, timing, secrets, and people making a fortune over us losing money. So don't be that person, please. You're smarter than that.
It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat.
So here's my quarterly look at my investing project. I opened a Roth IRA back in April of 2020, maxing out my annual contributions. That's $6,000 for you whippersnappers and $7,000 for people like me. And I put in 1/12 of that every single month. And in the first few days of the month, I average into about a dozen existing positions that I have held for most of my time in this Roth IRA. That is, it doesn't matter whether the market is up or down, a bull or bear market, no matter who the president is or what war is going or how high inflation is or what pandemic has hit us, or even if Kim and Kanye are no more, and who's that guy?
I'll do it, John, but not because of your little speech, but because I need the money.
I'm up for the month, I'm up for the year, and I'm up over the lifetime of this investment account. No matter what the ups and downs in the market have been, I wound up.
Then it's up, then it's up.
And in the bounce back bear market rally of March, or whatever they're calling it, I had a fun end to Q1. So what am I doing that's working? Well, the first is DCA, dollar cost averaging. It's not an impressive thing, but it's a habit that you have to build and exercise. Same amount monthly, same 12 stocks, but not just dividing up the $583 a month into 12s. I do watch for upcoming dividends. I do look at current returns. And with some investments up 50 or close to 100%, I don't like to raise my cost basis. So it's not just that I'm on autopilot. I am engaged and I am thinking through my investments. But the next important thing for me is I don't sell. I don't sell anything. Nothing, never, whatever the right way of saying that is, I don't do it. Yeah, I hold these things. I buy them and I say I'm going to hold these for at least 10 years. And they're going to work for me. I'm not working for them. So yeah, I'm trying to spend time in the market versus timing the market. That's the wisdom I'm following. And I'm trying not to be too overly diversified or diversified. I've done a video about just spreading our money so thin that we never get any benefit. You can take a look at that here. Hey, I know what you're thinking. What about FOMO with all those sudden drops and those great spikes in the market? I have a fear of missing out. Can't I play those waves? Hey, and I have other accounts that can feed that little FOMO that I feel from now and then. And it means that I can have other investments and I can trade other things. So I have investments like Coca-Cola and Bungie and Rocket Mortgage. And I even have some GameStop and a few shares of AMC just because, hey, it feels nice to be in the news every day, right? And I also have a trading account where I buy and sell options, sometimes based on the positions that I hold long term, and I hedge them in another account by selling options. In case those positions take a downturn, I can actually benefit from that while holding on to my core position. And I also have a forex account and a couple crypto accounts. So I don't need to have the Roth IRA do everything for me. And by letting it do its one thing and doing it well, I've avoided market downturns and the pain that the first quarter felt. Hey, now what about bear markets and those sudden down days where the news is bleeding in headlines about how much the market is down? What do I do on days like that? Well, actually, it makes me feel good, because that's when I realized that my good investments, the good things that I'm going to hold for 10 years, just went on sale. And that's an unusual response, that psychology of responding to something that you have money in, watching it go down and feeling good because that means you get to buy more of it. That is not a natural feeling, and that takes years for most of us, especially slowpokes like me. It takes years for us to become comfortable with. So I see a flashing sale sign when the market dumps, and I'm going to own these 12 stocks, and I'm going to let them pay me while I sleep so I can get a better price doing it, and when I do, I'm happy. So where do I get the money to do things like this Roth IRA experiment? Well, I work extra jobs. I work as an adjunct professor, for example, and 100%, every penny I get from that, after taxes, goes into this account and funds this account. I don't make money from YouTube, and I'm not like all those YouTubers who are multimillionaires, and by the way, are having a huge fight on YouTube now about what their actual source of capital investment and income is from all of their fancy trading accounts and all their financial advice channels. I'm not part of those fights. You may enjoy them, but they're not going to benefit you. The things that are going to benefit you are the ways that we can find ways in a difficult and up and down market to learn to manage the thing that really gets in our own way, and that is us. So you're probably wondering, why am I up after Q1 when everybody else is down and the markets have been screaming and bleeding in red and YouTubers are crying recession, recession, and you're wondering, what's your secret and how much does it cost? Well, it's free 99. And by the way, this is not investment advice. Throughout all of this, for 2 years plus now, I have just done the same thing. I have kept buying, kept investing, and following the market rather than being manipulated into buying or selling or trading or using leverage. That's like using a credit line or investing on crack. And most days I didn't even open my account. And that took a lot of self-discipline not to constantly keep it open in the background while I did my work. To be able to say, I'm going to check in at certain times. I get to pick the times. I'm not going to let CNBC, I'm not going to let the market scare me into checking my account to see what's wrong with it. Instead, I'm going to be disciplined and I'm going to choose my way of investing. And it turns out that it works. Hey, I did start the account at an ideal time right after the pandemic scare and drop of March 2020, and I started in April of 2020. That took guts. And yes, I'm up from that time, and most people who are in the market are up from that time. So yeah, that timing was good. But since then, I've done nothing different. I haven't changed my approach. And after Q1, I'm up between my contributions and dividend returns. Yes, I am up. You see, most of us won't be able to trade our way to riches. No matter which YouTuber you follow, or which course we buy, or trading room we join for $99 a month. And by the way, if they're making so much money flipping their own trades every day, why do they need your money too? Hey, and thanks for being part of the Do-Over Show. Please, would you tap the like button, and while you're down there, please subscribe and ring the notification bell so you don't miss the next episode. I'm so glad you found me, and I found you. Thanks.